Good morning, Predicted Trades family. Hope everybody's doing well. We had a fun day yesterday. So, for a quick review, let's take a look at ES. Let's see, 2 weeks ago we had CPI numbers that shot us up, firing our squeezes to the upside, where we took off from 41.36.5 and got up to the daily 200. We rejected that and started selling back off, and in 2 days' time, we're right back to 41.36.5, where we took off from 2 weeks ago. At the same time, the daily 21 caught up above that zone, so that we got our reversion to the mean in this sell-off back to our 41.36 zone. As you can see, yesterday we finally got to that mean. We rejected lower just to get to our 41.36.5, which we held and closed above. Overnight, you can see that we reached down to tag that 41.20. If you remember me talking about it yesterday, or if you remember from a couple of weeks ago, when we were going into CPI, POC was jumping between 41.20 and 41.36.5. So I just put that in my notes to remember that both of those numbers were previous POCs for this month. So a lot of volume was exchanged there. And yesterday I talked about if we slipped 41.36.5 and rejected it, we'd get down to that 41.20. We didn't get that yesterday, but overnight we did slip down and tag 41.20, giving us an overnight low. From that 41.20, we bounced right up to the daily mean, where we took a break. So, if you remember from prep yesterday, I talked about a couple of scenarios for the week. Scenario 1 was getting down to the mean, to this zone, consolidating and taking back off to get back to our 4200, to this 4205, where the daily 8 and daily 15 now are overlapping, and the 8 is potentially crossing back under. As you know, or as I've talked about before, when these daily moving averages cross, they can become a magnet. So now we have them sitting up at 4205. And if we got up there today, we would be somewhat filling that gap, completely filling the gap down that we had from Friday to Monday. Would be getting back to, about that 4232. And this first Keltner up. So, when we start to think about what, I talked about that being scenario 1, where we got here and held and took back off. There was also scenario 2, where we got here and consolidate for, maybe the rest of the week, bouncing between key levels. And scenario 3 was that the daily 50 sits down below, just below 4,000. It would take a few days for the daily 50 to catch up to 4,000, and we would need a little pop back up to the daily 8 for that to happen. Just because if we keep going down, this daily 50 will kind of flatten out and not step up as much. But scenario 3 was we get to these POCs, we slip below them, and then reject them, and start the journey down to the daily 50. So that was scenario 3. If scenario 1, where we hold and bounce, or scenario 2, where we hold and consolidate at the mean, don't happen. So, before we start to talk about what we could get for today, let's take a quick look at that economic calendar. Today, we don't have too much, but we have some of this PMI data coming out at 9:45, so just after the bell, and 10 a.m., new home sales. Tomorrow, we have durable goods, pending home sales, core capital equipment. Thursday and Friday have a lot more economic data. So when I talk about scenario 2, where we could just consolidate at the mean, it could be in an effort to wait for this economic data coming out Thursday and Friday. So, and we also have Powell speaking at Jackson Hole Retreat at 10 a.m. on Friday. So if we do scenario 2, the market is trying to consolidate at the mean and wait for that whole Jackson Hole Retreat summit, speech, whatever you want to call it. So that's what the economic forecast looks like for this week. Now, when we dig into what we could get today, talking about scenario 1, where we are going to bounce. Basically today, during the cash session, if we are going to see buyers step in and try to take us back up, basically looking for them to hold that overnight low at 41.20, this 30-minute squeeze bottom, although, yeah, it's an hourly, sorry. We do have an hourly and a 30-minute, and they pretty much overlap. So the bottom of that squeeze kind of reaches down to 41.20, right? And is at the bottom of our shaded zone around 41.36.5. The top of that squeeze is back up at that 41.65 where we rejected yesterday before heading down to that 41.36.5. And let's just, if you didn't watch the recap that I posted, I highly recommend you go watch the recap that I posted about the trades we took yesterday. But it was pretty clean to our key levels and to our beast tool. We opened under that 41.83 and just started to dump. We tried to bounce at 41.65 but didn't really hold, and the next 30-minute candle took us through it into the mean. But basically we dropped below 41.65, we came up to test it and couldn't break through on 1, 2, 3 30-minute candles. So that was a good sign that we were going to roll back over and go to that 41.36.5. So even if you missed the morning trades and shorts, it set up a perfect opportunity of a retest and rejection, right? I talk about this all the time. When we get to a key level, there are a number of things that can happen. We can tag it and take back off. We can slip below it, come back for the retest, and get a rejection. So let's all kind of note and remember that phrase, retest and rejection, and mainly just retest, right? We slip through a key level, through the mean, we're going to get the retest, and that is a huge clue for, do we go back up or do we go down from here? So we loaded back into those shorts, took it down. Great trades all around. Definitely watch that recap video. So for today, looking for us to hold this zone, squeeze bottoms, 41.20. But ultimately, this 41.36.5, we could take a quick dip to that and then get going. Once, if we can get going to the upside, once we get through the mean, looking for us to take out 41.65.5, firing this squeeze to the upside to get us back to 4,200, to these daily moving averages around 42.10. And if we can, back to filling that gap where this first Keltner up sits at 42.23. But we could get that scenario too, where we kind of bounce between these old POCs and the mean and 41.65. We've got 2 key levels of support below. We've got this key zone above with the 21 and 41.65 so that we could consolidate in between them. If we start to slip below 41.36.5, 41.20, and we reject them on a retest, we are likely coming down to that 4100, 4087, 4071, 4056, all key levels if we start to slip below 4100. So we've got our targets to the upside, targets to the downside. NQ. NQ already made it through the mean before yesterday started cash session. And we slipped 13,000, but did a pretty good job of holding 900. We slipped below that this morning, or overnight, almost tagging that next Keltner down. Just a little above 800, and now we're back above 900. So, on NQ for today, we'd love to see us hold 900. Just like for ES holding 41.36.5. As you can see, that would kind of set up an inverse head and shoulders, with our shoulder being, where we based yesterday at the end of the day, and the head being down here. So let's see if we can hold that 900, these squeeze bottoms, maybe less yesterday's low. If we do hold those and start pushing it back above 13,000, we'd fire the squeeze to the upside to get back to the mean, this 150, and this 225-ish, let's call it, where the daily 8 now sits. The daily 8 and 15 crossed yesterday. If we get back to that daily 8, pretty much fills the gap down that we got. So that's the upside target. If we start to lose 900 in this first Keltner, next stop could be that 600 and 525 where that second Keltner down sits. Ready. That midday rejection, it rejected the mean, the 21. Just kind of adding confluence to a rejection that we were calling on that 41.65. But yesterday and overnight, we did not even get down to that key psych level of 1900. So it's still decently held above that. So for today, looking for bottom of the squeeze, yesterday's low, overnight low, 1905, 1910, to be support if we do take a little slip to revisit. If we can catch a bounce there and get back to the mean and through it, we'll fire that squeeze to the upside with the goal of, again, getting back to daily moving averages above, which would fill the gap and engulf yesterday. But if we start to slip that 1910.05, we're going to test 1900, a huge key level if we slip that down to the next Keltner at 1888. YM. On YM, slipped down, tried to retest the 15, rejected, got down to the 21 yesterday. Tried to hold it overnight, had that one slip below. Ooh, look at that wick right there. To tag that big key level, 33,900, 902. And yes, sometimes these dollars matter. If you notice yesterday, we talked about it. We got down to $30,001 at the lows. And we even came back and tested that $1 and held it. We were laughing pretty hard about that. Wouldn't give us that $1. and fully tap 3,000. So yeah, these, I know it seems silly sometimes that these aren't even numbers, or it's not 520, it's 519, it's not 900, it's 902. I do it on purpose. These are key numbers. So overnight we tag that back above the daily mean. So let's see if the mean can hold us and start to propel us back up to these squeeze tops and to where we rejected midday yesterday. If we can get through 200 and these squeeze tops, it's a goal to get back to these daily moving averages above. And it looks like we'd have to get back to about that 520 to be close to filling the gap. Looks like we'd really actually need to be up near, yeah, call it 650, maybe 700 to completely fill the gap for YM. If we start to lose at 33,900, that's daily mean, squeeze bottom. Next stop will be that first Keltner down at 32,600 and psych level 32,500. Apple. Apple obviously went down with the market, but not too terribly hard. The daily 21 on Apple still sits down at about 165.5, which is where POC was. So if we are going to see the market roll over and start to lose the overnight lows and squeeze bottom, we'll see Apple come back to this 165.5 where the daily 21 sits. And we also had POC for this month used to be down at 165 before all of this volume up here, which left POC back up at 173. So let's see if today we can hold this squeeze bottom at around 167. Yesterday's low as well, right there. We are in a nice wedge here, which we could start to fire quickly to the upside. If we can start to take out this 168.40, top of this squeeze. First stop would be to get up to the next squeeze and kind of yesterday's highs around 169.5 to get to 170 where that daily 8 will likely be sitting. Through that, it's up to our zone above. So we got our targets to the downside, targets to the upside. AMD made it down to this 93, 92 and a half-ish. And kind of hung around that zone, right at it, pre-market. So if we can get back above this 93 level, start to fire these squeezes up. First stop that 94. Pretty easy, 94, 95, 96 to get back to the daily mean and get back to filling that gap. If we start to lose 91, 91, where the bottom of those squeezes sit, likely coming down to 90 psych level. Amazon rejected the mean yesterday, came down to 132. 133, a little bit under 132. Up a little bit pre-market. So let's say if we want to revisit yesterday's low, back at that 132.85 where the bottom of the squeeze sits. If we can bounce there or if we can stay above it and start to take out this squeeze top at around 134 and a quarter. Goal is to get back to that daily 21 up at 135 probably in a quarter. And if we can keep going through that, probably up to this 138 where that wick sits, which would basically fill the gap. So BA did not sell off quite so bad as much as the market did yesterday. Basically, just wedging and trying to base as it landed near that first Keltner down. So let's see if BA can quickly take out yesterday's high at around 160 and a quarter. That would fire these squeezes to the upside and allow us to get back to fill the gap up to our zone above. If we start to lose yesterday's low and the squeeze bottom, we have a daily squeeze down at 155. Cat. Cat pretty clearly got up to key level and rejected. So retest and reject, setting up that short. Let's see if market does take a little dip to fill this teensy gap up. We'll likely see Cat hit this daily 21 and daily